What's up, everybody? Welcome to the Stocks channel. My name is Cory, and tonight's episode is your stock market technical analysis daily update. We saw a bounce across the board in the stock market today, and we're still in a very volatile election week. Before we jump into the charts, please go ahead and smash that like button and subscribe to the channel to follow along with all of my daily updates. First up, we're going to take a look at the SP500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so we did see a bounce on the SPY ETF today, and we did close up over 1.1% today. So we can see we're still struggling to break through the $331 resistance level, and we're still trading and closing below the 5 EMA. So overall, we still have bearish price action, and we still have the bearish trend with the 5 EMA trading well below all of the other moving averages. And of course, that 20 simple moving average has sloped over and is negative sloping. So the bears still have full control of this market in the short term and the medium term. And the only good news for the bulls is they're still holding up above the critical support level of 325. So remember, if we start breaking below 325 and we also close and break below 321, the bears will be in full control of this chart and they will start shorting the market much lower. So right now the bulls need to continue to hold up above these critical support levels, and they have been able to do that. But you can see this trend is still in jeopardy, and now the 13 EMA is closing below the 50 EMA. So this is still a volatile week with the election going on, and you can see there's a lot of uncertainty in the stock market, and a lot of people are kind of waiting it out or selling, and they're really not ready to jump back into the market just yet. We're not seeing bullish price action, and the trend is still in a very negative sloping trend, with the 5 EMA almost going down in a straight line still. So the bulls did start to build a base around 326, which is just above our 325 level, and as long as we can remain above that level, we can start to see this trend reverse. So keep an eye on the resistance levels above at 331. If the bulls can get a close above that, that should also be a close above the 5 EMA, and the bulls might be able to start reversing this trend. Above there, we're still going to have resistance at the gap at 333, and that gap will close at 338. Now, downside price targets are, of course, a close below 325 would be bearish, and then below that, 321 is the final level of support for the bulls. And if we start closing below 321, it's going to be very bad news for the bulls. So the most important thing to watch tomorrow on the SPY ETF is to see if we can get a close above 331 and the 5 EMA. That will be the first sign of bullish price action. And right now, the bears are still fully in control of the SPY ETF. So if you are trading and you're going long, you want to get in and out quickly, and you don't want to hold on to your position and get greedy. Next up is the Nasdaq 100 QQQ ETF, and we see a very similar thing with the Nasdaq with bearish price action and bearish trending. The 13 EMA hasn't crossed below the 50 EMA just yet, but you can see that it's sloping negative and getting ready to. The 20 EMA has rolled over and heading negative, and the price action is closing below all the moving averages. So on the Nasdaq 100 today, we only went up about 0.22%, which was by far the worst of the three indices. We did close above the low for Friday, so there is some silver lining, and we did find support at the low of Friday's low. So we're still getting some technical balances in this trend, but overall the trend is extremely bearish, and you can see that the 5 EMA is very negative sloping, and the price action is still closing below the 5 EMA. So the bulls have a lot of work to do on this chart, and if the bears can come down to the critical resistance at 261, and if we do close below 261, the bears will have full control of the Nasdaq 100. So don't forget, we already have the lower high, and if we get a lower low, that is the sign of a bear market. So right now, the bulls still look like they're holding up within some sort of consolidation because we do have a lower high, but we also currently have a higher low. So all of that's subject to change if we start closing lower. But right now, this could be considered a corrective wedge pattern forming, and we could get an attempt at this resistance trend line to break out of this wedge. So there is still possibility for technical bounces off of these levels, and we could see price action start heading higher at the first sight of any good news. So I still don't suggest you try shorting this market, and if you are shorting, make sure you set stop losses the same way as if you're going long. Manage your risk because volatility is here to stay for at least a couple more weeks. Next up is the Dow Jones DIA ETF, and we see the Dow Jones looked pretty good today, but still closing below the 5 EMA. The Dow Jones price action closed up over 1.5%, and we did see some positive signs of life for the Dow. So the Dow found support at the gap closure at 264, and it has been holding up above that level, and it did get a nice bounce today. So there's still the gap above on the Dow, which is going to close at a price target of 273, and the lower part of that gap is at 272. So right now, to the upside on the Dow, that gap is our price target, and that will close at a price of 273, and we're going to look to see if it's going to hold up as resistance. To the downside, we have the 0.236 Fibonacci retracement at 266, and if we start breaking and closing below 264 to the downside, that's going to be another sign that the bears are in full control of the Dow. So we have that lower high on the Dow, and we already also have that lower low. So the bulls really need to start bouncing from here and start reversing this trend if there's any hope for the Dow. Next up is the VIX, which is our fear indicator, and this is driving the volatility in the market because the VIX is still trading in the high 30s. So as long as the VIX is elevated like this, we're going to continue to see volatility, and it doesn't look like the VIX is ready to leave anytime soon. We're still trading well above the 5 EMA, and you can see that the trend is extremely bullish, and all of the moving averages are stacked to the bull side. So we still have a very strong bullish trend on the VIX, and the price action is still closing above the 5 EMA. So bullish price action and bullish trending on the VIX means volatility is here to stay, and as long as volatility is here, you don't want to hold on to your positions for very long as a trader. Get in and out, take your profit, and be happy with what you get, and get ready for your next position in your next trade. So right now, we need to see the VIX start closing below the 5 EMA, and we do have a support level at 34.7. So in order to see the stock market start heading higher, we really need to see the VIX start cooling off and heading lower. So a VIX below 34.7 will be our first sign that fear is leaving this market and we could start grinding higher. But as long as the VIX is trading above the 5 EMA, we're not likely going to see the market start grinding higher with any sort of sustainable rally. Next up is Apple stock, and Apple is our market moving stock, and we see Apple really didn't go anywhere today, still kind of holding up around that $108 level. So Apple's still in a bear trend, and we still have bearish price action on Apple. So as long as we're trending downward on Apple, we're looking towards our next support level as possible buying opportunities, which is down around $104. If $104 breaks down and we get a close below that level, we're likely going to see Apple close the gap at $96. Now keep in mind, Apple is trading near the bottom of the Bollinger Band, and we could see technical bounces off of these levels. So again, if you're shorting this market, make sure you're managing your risk and setting your stop losses, because it only takes some little bit of good news and we're going to start seeing significant bounces off of these oversold levels. Next up is Tesla stock, and Tesla stock still also in a bearish trend, and we still have bearish price action. The price is below all the moving averages, and the 5 EMA is getting ready to cross below the 50 EMA. Remember, Tesla price action below the 50 EMA is bearish, and there's likely going to be bears shorting into these resistance levels and driving Tesla lower. The Tesla bulls need to start closing back above the 50 EMA, and we need to see that 5 EMA start closing back above the 13 EMA. So right now, if you're trading Tesla, be careful, because the bears look like they're taking over this chart, and it's not going to be pretty if they start shorting the stock into the ground. Next up is the US dollar, and this is DXY that we're looking at, and we can see that the US dollar did break above resistance, and it did get a close above that level right around $93.86. So the dollar's going back into a bull market, and we can see that the trend is going bullish, and the 5 EMA is starting to cross above all the moving averages, and the 20 simple moving average is starting to reverse and has a positive slope. So right now the trend is bullish and the price action is bullish on the dollar, and it looks like the dollar is going to continue to head higher. Next up is gold, and we see that gold did find support at our 1860 support level, and we did get a 2-day bounce off of that level. So that is a good sign for the bulls, but we still want to see that 5 EMA cross above the 13 EMA, which lets us know that we're going into a bullish trend. We're starting to get bullish price action because we did bounce off support and we did get a price action close above the 5 EMA. So once that 5 EMA crosses back above the 13 EMA and we can get a price action close above the 20 simple moving average, that'll be the first sign that gold's going back into a bull market. So right now you could be a buyer of gold, but set your stop loss below support at 1860, because if we break down below the 1860 support, our next support level is down here at 1809. Next up, a quick look at silver. We see the very similar sign bouncing off of support, and we're getting a continuation of that bounce. We have bullish price action, but we still need to see a close above the 20 simple moving average and a cross of the 5 EMA above the 13. Next up is Bitcoin, and Bitcoin is still in consolidation below our price target at $13,800. You can see we're finding support right around the 13 EMA, and we're building a nice base below resistance, getting ready to build up that energy and break through resistance. So our next price target on Bitcoin, once we break through this resistance level, is going to be all the way up here at $17,000. So Bitcoin looks like it still needs some consolidation and it still needs some time to cool off, but you can see that the price action and the trends are very bullish, and Bitcoin's just cooling off after that monster rally that it had, getting ready for its next leg higher. Next up is financial sector, and we see financials with bullish price action closing back into our channel and above the 5 EMA. The 5 EMA starting to head to the upside, and we could start seeing a reversal in the financials soon. Overall, the trend is still bearish and the price action still has some work to do, but it is a good sign for financials that we did not get a lower low on this chart, and we're starting to bounce off of this level, which is a higher low. So that's a good sign for the bulls, but it looks like the bears are still control in the short term. Next up is the industrial sector, and we see the industrials looking bullish today, getting a price action close above the 5 EMA as well as the 50 EMA. We can see the 5 EMA is starting to slope back to the upside, and this could be the beginning of a reversal of the bearish trend. So only time will tell, but it is looking good for the bulls in the short term, and they did bounce off of this support level, and they did prevent the chart from forming a lower low. Next up is healthcare, and we see healthcare also bouncing off support, holding up above forming a lower low and getting a close above the 5 EMA. We still have short-term bearish trending, but it is looking good, and the bulls look like they're ready to start reversing this trend soon. So going back to the SP 500 to summarize all of this price action, you can see that we are getting some technical bounces in some of the sectors, and the stock market could be starting to reverse this bearish trend. But it's too soon to tell for sure if this trend is going to be reversing, and you can see on the S&P 500 we're still getting bearish trending and bearish price action. So right now, prepare for a volatile week. I don't expect volatility to go anywhere anytime soon. We could see volatility for at least 2 more weeks. So we're going to take this opportunity to be a trader and take advantage of all this volatility. But if we start seeing price action closes above 331 and the 5 EMA on the S&P 500, we are going to become more bullish on this market. And if we could eventually break above and close this gap and break out of this resistance trend line, we could start back into a bullish rally. Now that could still take a week or two. It's not like we're going to get there in a hurry. There's no rush in this market. And as long as there's volatility and an elevated VIX, I'm not expecting to see the market go up in a straight line or anything crazy like that. So there's definitely no reason to FOMO in. Take your time, watch some stocks that you've been wanting to get into and set some buy triggers and start accumulating into positions slowly, but manage your risk and don't go all in and over leverage yourself too much right now. So please help me out by smashing that like button. And if you're new to the channel and want to follow along with my daily updates, go ahead and smash that subscribe button. Thanks for watching, everybody. Good luck out there. And as always, I will see you in the next episode.